Hello, everybody, and welcome to Live Market Analysis using Supply and Demand. I'm Simon Klein, and I'd like to welcome each one of you. So if you'd like to type in the chat room, you'll see it on the right of your screen, and just type in where you're from and maybe how many years you've been trading, and we'll just make sure there's lots of people coming in now that everyone can hear me, and you can see my screen. You can see my cursor moving around as well. So just type in the chat room if you can see that. Let me know where you're from. Okay, so to the right of the screen, you can see at the bottom, there's an area where you can actually type your message. And we'll begin in about 30 seconds or so. So just wait for everyone to come in. Okay, again, I'm waiting for you to type something in the chat room to let me know that you can hear me and see me, see my screen. Whoops, 1 second. Okay. Okay, you should be able to chat now. Sorry about that. Okay, hi, Mark. Okay, great, excellent. And I can see the message coming in. Okay, perfect. Hi, John from the UK. Hi, Britt. Hi, David from Atlanta. Hi, Errol. Hi, Mike. Hi, Joe from South Jersey. Okay, excellent. So everyone can see and everyone can see my screen. Perfect. Hi, Jasper Basson from South Africa and Errol from Canada. Excellent. So welcome, everybody. So what we're going to do is we're going to cover some of the, I don't like to say secrets, but there's no secrets in trading. But we're going to look at supply and demand, and we're going to use that to do a live market analysis of the current markets. We're going to look at various forex markets. We're going to look at commodities and maybe some stocks as well. Hi, Michael. So let's begin with a quick disclaimer. All comments made by myself are for educational purposes only, and you all know there's a high degree of risk involved in all types of trading. Now, very important, focus, turn off all distractions and focus on what we're going to cover during this webinar. It may very well change your life. If you want to succeed at trading and you're no longer, or you're not yet where you want to be with your trading, listen carefully. Hi, Alex from North Jersey. Okay, so a little bit about myself. For those of you who don't know who I am, I'm the CEO of TradeSmart. TradeSmartForex.com is the website. I'm a professional trader. I've been trading for over 12 years. I'm a trading coach, also an author at Finance Magnets. I graduated in 1996 from University College London, and my first job as a graduate was working at Credit Suisse in both London and then in New York. And I started my professional trading career as an equity trader at Generic Trading in Philadelphia, and that was in 2005. After passing the Series 7, which is it was known then as the NASD, the National Association of Security Dealers, and that became FINRA, the Financial Industry Regulatory Authority. Okay, so let's begin. So trading is a business. I like to begin all my webinars this way, pretty much all of them. Trading is a business, so you must treat it like a business. Hobbies cost money. Businesses make money. If you're starting trading, start and treat it as a business. That way you'll have a much higher degree of becoming successful. And you all know the success rates are not very high. And if you ask most people, if they have a trading plan, for example, most people don't, or if they do, they can't seem to follow it. You must treat your trading like a business. It's much more relaxing if you plan your trades and then trade your plan. So here's the agenda of what we're going to cover. We're going to do a quick introduction to chart reading. Again, this may be basic, but we have to cover it because there's some people here that are complete beginners. And even if you've been trading for many years, you may pick up something new. I'm going to ask the question, why am I always wrong? Very frustrating for beginning traders to always feel that the market's out to get them. I mean, just type a yes in the room if you've ever felt like that. Like whatever you seem to be doing, it looks like the market's out to get you. It's like the market just took my money away from me and I'm going to get it back. You know, anyone ever felt like that? That's not the correct way to approach trading, by the way, but most traders begin that way. I certainly went through a period where, you know, it felt like that. And then we're going to go into supply and demand. We're going to cover some of the basics of supply and demand and how you see that in the markets and how you can actually start using that today or from tomorrow with your trading. However which way you're trading, add this to your trading and you'll start to see things in a different way. And then we'll take what we learn and we'll apply it in the live market with whatever the market's doing at this very moment in time. We may discuss some trading opportunities that are happening now that you may be able to take advantage of. And then I'll open up to audience questions and answers at the end. And I'll also, at the end, offer you a way to take a step forward if you want to work together with me. Okay, so let's start with an introduction to chart reading. So this is a chart over here, and we're using plain Japanese candlesticks. There are different types of Japanese candlesticks charts. For example, there's Heikin-Ashi candlesticks as well, but we're using the plain ones. The first step that you need to do or take in order to become a successful trader is you need to learn how to read the markets like a pro. Stage one. If you're a technical trader, and even if you're trading off fundamentals, fundamentals will not tell you how to enter the trade or how to manage your risk. It might tell you that something's overpriced or underpriced, but it won't tell you how to get in and out of that position. You need to use technicals to be able to manage your risk, for example. So you need to know how to read the charts in order to do that. And we use Japanese candlestick charts, and we're going to cover a little bit about Japanese candlestick basics. So here's the basics. Again, you've got to know this, and this may be new for some of you. So this is what Japanese candlesticks look like. They represent four prices: the open, the close, the high, and the low. If the candlestick's green, it means it opened below the close, or it closed higher than the open for that time period. Any color will do. Whatever it represents closing higher than the open, you can pick black and white, blue and purple, whatever you want, whatever works for you. This is called the body of the candlestick. These are called tails or wicks or shadows. Doesn't really matter what you call them, but this represents, depending on what time frame it's on, what happened during that time period. For example, if it's on a 5-minute chart, it will represent the open, close, high and low for that 5 minutes. It could be on a daily chart and represent what happened in a day. And likewise on the right, we have the open, close. If it closed below the open for that time period, then the candlestick's usually red, or whatever represents closing below the open for that period, and you've got the high and the low. Again, you don't need to have wicks or shadows. They can close at the same as the low, and then it'll just be a solid candlestick. Everyone following so far, just type a 1 in the room if this is clear to you, and then we're going to move on. There's two important candlesticks that you must know. And if you know what these candlesticks are, type them in the room now. The one on the left is called a what? Thanks, Alfred. And Alex and Linda, thanks you. What's this candlestick on the left called? Thanks, Nico. Okay, the candlestick on the left is called a hammer, okay? It usually represents a reversal, but not always. Most people are taught that this is a bullish candlestick. Yes, but it depends on the scenario in which it's happening in the market. Sometimes it's actually a bearish candlestick. And I'm going to show you, hopefully, during this webinar towards the end, when we're looking at the live market, examples of when this is actually bearish. And the one on the right, who knows what that is? The one on the right, type it in the room. Well done, B and John and Richard. Yes, B, exactly. It depends on the location. So this candlestick is usually known as a shooting star. Yeah, and again, this could be green as well. It doesn't matter what the color of the body of the candlestick is. And this usually represents a reversal candlestick when it's happening in the context of a downtrend and it's after a move up into a supply area or a resistance area in the market, you usually get one of those. Now, again, this could also be a bullish candlestick depending on where it's happening and what the context is. So yes, Nico, correct. So let's pose this question. Why am I always wrong? And I want everyone to answer this. Who's ever been in that situation where you feel the market's out to get you? Just type a 2 in the room now. Who's been in that situation you feel, and I'm going to explain the situation, you're going to see it very clearly now. And once you understand why you're wrong, then you can start learning how to be right. Trading is one of those professions where you almost lose your way to success. You make every single mistake possible and eliminate it, and then you're left with doing just the right thing. That's how the journey was for me. I made every single mistake in the book. And I say to people now, there's almost no mistake that anyone can make out there that I haven't made. I can also say from an experience perspective, there's no market I haven't seen. I've been trading almost every day, full time for the past 12 years, over 12 years now. And there's nothing a market can do that I haven't already seen, something similar. Yeah. So again, that's experience, and that's based on, that's based on time in the market and just seeing different scenarios. So let's take a look at this market. This is what the market looks like. And again, you can see what happened after the fact, but let's pose this scenario and how a beginning trader might trade. So this is what's happening. You're at this part of the market over here, this part of the chart, and the market's moving up, up, and up, and you recognize an uptrend. So you decide to buy. So you take your first position over here, which is a buy, and you've just learned how to trade by reading a book over the weekend, and you think you know what you're doing, and you buy. You identify an uptrend, you buy, it's moving up, up, and up, and it's in your favor. You don't know anything about stops or risk management. You just took a position, probably too big for your account size, and the market starts turning to the downside. And it goes, while you're not even watching it, and suddenly it goes all the way down here, and you look at the screen, and all of a sudden you're underwater big time. And you're like, what do I do now? Actually, you're staring at the screen in disbelief, and sometimes you just freeze and like, what just happened? I'm underwater now. I don't know what to do. I need to close. I'm in pain here. I'm losing too much. I need to get out of the trade. So you act emotionally and close a trade over here. And you say to yourself now, because you want to, the market just took my money from me. It was working. I want to get it back. So the market's going down now. I'm going to get back in with another trade. It's going down. I'm going to sell. So you take your second position over here on the sell side, and it goes in your favor a bit. And this time you've got an even bigger position on because you want to make the money back now. Because guess what? The market took your money away from you, and I want it back. Yeah. That's how people think at the beginning, which is not the correct way to think. And the market turns around. And before you know it, you're down big again and you get out. You take your second losing trade, and then you want to make it back again, or whatever reason, you got to buy. So you buy again, and then this one also goes against you, and it goes down and down and down and down and down. And you've kind of wiped out half your account here now, and you close this position. And then you take a step back. You say, okay, I've kind of figured this out now. I'm buying up here, and it's not working. I'm selling down here, and it's not working. What I need to be doing is selling up here and buying down there. So you take your next trade on. You decide, okay, I'm going to sell here. I learned something about, resistance, and I'm going to sell. This is resistance. Every time it goes up, it goes down again. So I'm selling. And this time what happens? It goes against you, and you end up taking a losing trade again over here. And you take a step back and you feel, no matter what I do, if I buy up here, it goes down. And when I try to sell up here, it goes up. What on earth is happening? Again, just type in the room if that's ever happened to you. It certainly happened to me. And I'm sure it's happened to almost any beginning trader. Somewhere along your journey, you're going to experience this. You're going to experience like the market's knocking you around and you've got no idea what's going on and why this is happening. And it's very, very frustrating. And how do you get yourself out of this situation? So this is a problem that we face as traders. Yeah, Fred, well done. So what we do is we identify, in the end, zones, buy zones, sell zones. And then we start to look deeper into what's really going on here. Why is it that when prices come up here, they go down, but why when they come up here this time, they go through? You start to ask questions. And again, most of this you won't find in any book. This is based on experience in the market about what's really happening. Now, can you explain why the market went down here and went up here? You've got to figure it out, because if you can understand the way the market's moving and why it's moving in that way, you can trade from a much stronger vantage point. If you're trading based on this line crossed over, you know, the faster moving average crossed over the slow, I'm in an uptrend, so I'm going to buy, but you don't really understand why. And then maybe it crosses the other way, and that means sell. It's the end of the uptrend. That's a bit abstract. I believe that in order to trade successfully, you really need to understand the mechanics of price movement in the market. And supply and demand is the foundation upon that. And if you understand that, you can trade with confidence and conviction in what you're doing, even if the trades don't work out. Because guess what? Not every trade is going to be a winner. And once you come to terms with that as a trader, that losing is part of a winning system, then you're okay taking losing trades. It's like, okay, so this trade was a loser. So what? I'm moving on to the next one because I know what I'm doing makes me money over time. Until you're in that place where you know that what you're doing makes you money over time, then you should be trading very small. You shouldn't be risking the house on any trade trying to make money or get rich quick. This is not the way to do it. It does take time to become a successful trader, and you have to make sure that the way you learn how to trade is based on sound and solid foundations that are timeless. So one of the foundations that you need to learn is supply and demand. If you're a trader, you need to learn about supply and demand. I don't care how you're trading. Supply and demand is a foundation of trading and a foundation of understanding market movement in any type of market. So what is supply and demand? Well, it's very, very simple. Prices move higher when demand exceeds supply. When there's more demand than supply, what does that mean? Now, there's some people that erroneously say prices move higher because there's more buying than selling. There can never be more buying than selling. There's an equal amount of buying and selling. If someone bought, someone must have sold. There's a match between buyer and seller. There's equal. What they mean to say is there's more willing buyers at certain price levels than willing sellers. Once the supply at that price level is gone, the price moves up to the next price level. And if there's more willing buyers at that level and there's no more supply, price will move up again. That's why prices rise when there's more willing buyers than willing sellers in the market. And the reverse of that is prices move down when there's more supply than demand. No one can argue with it. This is a fact. And the final way prices can move is sideways when there's an equal amount or roughly equal, there's a balance between supply and demand. So let me ask you a question. What moves markets? Does news move markets? Does geopolitical events move markets? What moves markets? Well, guess what? It's very simple. It's supply and demand. And you know what's good about this? As we said before, this will never change. When I first started trading, I learned to trade the specialist system. I learned to read the tape. I didn't even have to look at charts. I could understand what was going on by looking at the time and sales and the level 2 and the open book, which was the New York Stock Exchange specialist order flow. They saw the buy-in or the bids and offers, yeah? The problem with that system is that we were spotting what the specialist was doing on the New York Stock Exchange. That was in the days where the New York Stock Exchange specialist was a human being. But what happened was it moved to a hybrid system, part computer, part person. So the methodology that we used to trade to identify what the specialist was doing, if he was buying or she was buying, we'd be buying. And when they started selling, and we could spot that by looking at the different prints, which is a trade on the time and sales. And what happened was that stopped working when the system changed, when the technology changed. And guess what? I had to go back to the drawing board again and learn something. So wouldn't it be good to learn one thing, and that's the only thing that you need to learn, and apply that to your trading from now and forevermore, and it will never change. That's what supply and demand is. It will never change. It's been around since the beginning of time, and it will be around till the end of time. Okay, and no one can argue with that. So what is your job as a trader then? As a trader, all you need to do is to identify where supply and demand is on a chart. If you can identify successfully where supply and demand is on a chart, then you know ahead of time where the likely turning points are in the market. Wouldn't that be a good thing to know? Because then you know how to enter trades, how to manage your risk, because you know where stops go, and you know where your targets are. If you trade between levels of supply and demand in the market, in an uptrend, for example, if you buy in demand and sell into supply, well, you can't do that unless you can identify where demand and supply is in the market. Wouldn't you agree? Kerry, news doesn't move markets. People move markets. And let me prove that to you. Say, for example, a news event comes out. There's a pharmaceutical company. Yeah. And pharmaceutical company has found now a cure for cancer. So one pill costs about $100, just say. And if you take this pill, it cures you. What do you think will happen to the price of that pharmaceutical company? It's trading on the New York Stock Exchange. And it's Sunday. What's going to happen to the price of that stock? Go on, type it in the room. What's going to happen to it? The news is great news. What's going to happen to that stock? Do you want to buy that stock on Monday morning? Here's the clue. The market's closed. Nothing's happening to the price of the stock. The stock price does not move. Good news came out. The stock price does not move. Why not? Because the market's closed. Yes, Linda, that's correct. What's likely to happen is it's going to gap up. If everyone in the world wants to buy, someone's got to be on the sell side, correct? So it's going to gap up. It's going to gap up to an area, or the specialist is going to gap up into an area where where there's willing sellers in the marketplace. And if there's no willing sellers, guess what? The specialist or the market makers have to be the seller of last resort. That's how it works. And they're going to sell at a price where they can make money. So why is it that many times a stock gaps up and the rest of the day, it just slowly goes down and down and down? And guess who's on the other side? Buying on the way down, who sold high? The specialists, the market makers. They sell at a place where they can make a profit. They don't want to go out of business. The specialists don't generally go out of business, and you know, they're in business. Yeah. So they're selling at a place if the market gaps up. So do you want to be buying on the market open? Well, sometimes yes, but it depends. It depends where it gaps to, where it's gapping from, and various other factors. Okay, so you have to analyze that ahead of time. But yes, what moves the market? Was it the news? No. It's the people moving market. People move market. People cause supply and demand in the market by acting on the news, for example. It's their response to the news. If people didn't act on the news and didn't do anything, then nothing happens. You need people to move markets. That's what causes supply. What causes people to want to buy or sell? Well, that's a different question. It could be this news. It could be something else. It could be anything. But that doesn't really matter, because the charts are the footprint of money. And if we can understand how to see where supply and demand is in the market, then we know ahead of time where the market's likely to turn. So let's have a look at what supply and demand look like. You have a market looking like this. And you look down here and you see prices went down and then went up. It must be, if prices are rising, that there must be more supply than demand. So we could say that this area is a demand zone. For example, remember, demand and supply are not, you know, a lot of the books say join the peaks and the troughs, you know, like put a line across and that's demand and that's support. No, it's not. Support is an area, it's a zone, it's not one single price, okay? Professional traders don't buy at one price primarily, they buy in zones. You can start, you know, buying in this zone. This is the demand zone, buy in here. And likewise, if you can see over here, prices went up and then they dropped. It must be there's more supply than demand, so this is a supply zone. So far, so good? So how do you identify high probability turning points in the market? Type a yes in the room now, or one in the room, or say Excited? I'm going to reveal to you now how to actually start doing that. Again, there's many things that go into it, but we're going to look at one main factor that you can start using immediately to help you with your trading. Again, it takes a bit of time to start spotting it. I tell my traders that at the beginning of your trading journey, you have to really have a set of rules that you go to the market and you're looking, does this fit my rules? Is this the scenario I'm looking for? Eventually, when you get more experienced at it, you look at the market and it jumps out at you. Trades find you. At the beginning, you have to go and find trades. But when you become more experienced, the trades jump out. You look at the chart and it jumps out at you because you know what you're looking for. And you don't even need to look for it anymore. You just recognize it instantaneously. It kind of jumps out of the screen. So let's go into this. So let's do some live market analysis now. Okay, I'm going to pick up the live charts and let's take a look. Okay, so what sort of things do you need to look at to try and find where those high probability turning points are? Yes, Kerry, hopefully you're going to get that point. Yes. So let's show you. Let's have a look at the, you can see I've drawn many zones on here, but let's have a look at this particular zone here, which was in play, I think, last week. There's an area here, and you see this is a pivot, okay? And this is a big bar down, okay? So what happens when price comes back to this level? Got a big drop down. And again, what happens when price comes back to this level? We drop down again. Okay, interesting. So what you need to do is start looking for moves in the market for big bars, okay? Now, let's take a look at some other charts and time frames. Let's have a look at the euro, for example. Okay. Right, let's take a look at the hourly chart here. And we can see today, here's an area where price moved up from. Here we've got big bars as well. But look what happens when price hits this zone today. What happens up here? What happens here? Why do we got this big move up? Look over here. Here we have a move up and another move up to this area. And when it comes back down here again, it shoots up. But why does it stop here? What's going on over there? So let's take a look at this area. Look left. And let's zoom in on this area. Again, we've got an area here of supply. Again, you have to learn how to identify these areas. But look at this. 1, 2, 3 bars down. Never been back this area yet. What happens when we hit the area? Prices turn. We're in kind of up moving here. And we turn and we start moving down. Where are we going down to? Well, the opposing demand level. And then we knock up again against this supply zone. And finally, what's happening here? Why is it breaking now? Well, that's what you need to learn as well. When is it likely to break and go down and end up in the next level down? And you see I've got various zones drawn here that this one hasn't been hit yet, but if and when price gets down here, it's most likely to bounce to the upside. Okay, let's move along to the pound. Now, here's a great level and a great trade from today. If we move the market back, and again, this is not in hindsight, and it's not hindsight's 2020 vision. This is actually seeing the market beforehand. Again, I do this every week in the trading room. We go through and prepare a week's trading, and the lines are drawn ahead of time, like this zone over here. Price is likely to bounce from here. This is demand, and actually starts here, really. So look what happens when price, here's a zone that happened yesterday. A big drop down from this area. Notice big bar. That's what we're looking for. Now, it's not every big bar. It's a bit more involved than that. But look what happens when price hits against this area today. You could take a trade of this. You could sell it over here, put a stop above there, and take it down to the next demand area, which is down here. Actually, here. That's a pretty big risk to reward, maybe around at least 10 to 1. Now, watch what happens. Price turns to the downside from here. How do you know that? Well, this line was drawn ahead of time. And Price goes down. Where's it going to stop? Probably somewhere down here, because this is where demand is. Look at the big move up from here. And let's see what happens. Pretty close. This is the first part of the area. If we could draw a line here. It's really this whole zone. Okay. That's where we stopped and turned. Know that ahead of time. Know that if you're taking a trade here, there's nothing really to stop you until down here. And how do you know that? Look for big moves look for big bars and big moves. That's the one thing that you need to start doing. Okay, let's move on. Australian dollar, and we can look at any time frame. It's the same in any time frame. Let's pick this one, 4-hour chart. Why did price stop here? Again, we have a drop from here. Notice 1, 2, 3 bar drop. We've moved back once, barely into the zone. So when price comes back in again, we drop. Here we move up. We've got a big move up here, but eventually we go below. Now, why is price going up here? Well, we have to go down a time frame to be able to see that. And that's exactly what's going on here. You can see this big bar up here. Notice when price comes down to this area, we push up again. You could take a trade from here up to here. But when it comes down again, it goes straight through and it comes into this zone, this other zone below. And look what happens there. We get a big move up. It's not that big a move, but around 20 pips. Okay, let's look at something. Let's look at some commodities now. Let's look at gold. Okay, look at this. Let's look on the daily. Let's look on the daily chart here. Again, these lines were drawn ahead of time. We were in the trading room and we said the market's probably going to bounce here. We'll look to sell it in this area. Again, this is supply. Look what happens. And down here, when this turned from here, this is demand. Look, big bar up, big solid bar, 1, 2, and a small one. So what happens when price comes here? You know ahead of time. If you're taking a trade here, that's your target. If you're taking a trade here, that's your target. And look what happens when it gets back into this zone again. And again, these are not drawn on afterwards. They're drawn on before. You cannot trade 2020 hindsight. No, you can't say, oh, I buy here and I sell there after you saw it happen. You need to make these decisions ahead of time. You need to know which levels you're going to buy and sell from ahead of time. Like this is demand, big bar. Yeah. Why is price dropping here? What's going? This is a weekly chart. Why did price drop here? What's going on there? Supply. Again, this is not the greatest supply zone, but albeit it's around the highs. And let's look at oil. It looks like they've lost the line. Oh, no, they've come. Okay, oil. Let's again look at the daily chart. And again, you can see a number of things going on here. This is supply. Big bar down. What happens when price runs back up here? We get knocked down again. And here again. And eventually, what happens is we break through it. Why? So this is beyond what we're going to cover. But how do you know when it's going to break it? Again, there are ways that you can know when it's likely to break it. And if you're trading down here, you can trade to break this level. And again, why did price drop from this level? Look here. Same. Look at this. Big drop from here. So when price runs back up into this level, that's where you want to be selling. And again. Okay, next time it's less likely to go down and more likely to break it. And let's look at one more. Actually, I'll let you guys type it in the room. Anyone want to put in any symbol of any stock or any currency pair that we haven't looked at so far, the first one to type in, I'm going to take a look at that. And there probably won't be on lines. What we'll do is we'll cycle back and we'll put some lines on and we'll see what happens before price gets there. Again, pick anything. Okay, so what do we have? Who's the first one? Apple. Okay, let's look at Apple. Actually, no, we had FCX. Okay. Okay, being a stock, there's lots of gaps. But let's take it on a let's see if we can do it on a bigger time frame here. Okay, let's do it on a weekly chart. What we're going to do is we're going to cycle back all the way. You know, I haven't learned this, and we're going to mark out some zones based on what we've just learned now and see what happens when price gets there. Okay, so over here we've got, like, this is where this moves to. Actually, let's do it a bit higher. We got from here. We got demand here. Okay, nice big bar coming from up from here. Let's look left and see if we can find corresponding supply. So we got supply kind of here. Okay, got two big bars, notice. Yeah. Now let's see what happens when price goes up to those areas. So here we break through it. And it's gone off the, okay, so it's gone on the higher level over here. Okay, that's fine. So if we were to put that over here, for example, you can see here there's two levels. There's one, it went through to the top level here. See what happens when price gets there? Now I'm interested to see what happens if price goes down here, if it does. And we'll put some more lines on. Again, I haven't planned this, you to pick one. I just put some lines on and let's see. Okay, so where are we now? We're in demand. What's likely to happen here? Again, it's doing the same thing. There's a level slightly below and look what's happening. Again, same thing. I originally put it around the lower point, but if, let's just do this again. Look what's happening here. Again, you can see it. I just drew it around this one, but that's the bottom of the move. There's a big bar as well. Look what happens when price gets here. Here, here. And again, now it's going lower. And again, we can put various other levels on as we go, but this is a pretty big move up. Okay, move down, move up. Okay. So let me ask you guys a question. Let's see if we can do this. I'm going to put a poll in. Let's see if I can find it. Okay. Let me ask you a question. Did you learn something new just now? I'm going to just post it. Let me see if I can do that and publish it. You'll see a poll coming on the right now. Did you learn something new from that? How to identify supply and demand, look for where a big move began. And start to, I mean, we just did this now on here. And again, we did a slightly lower level here, but you can see, look where price stopped. Stopped dead. Big bar up here, and look where it stopped here. Again, eventually it went down, but you could take trades off this, again, on smaller time frames. Or bigger time frames. Again, we're on a weekly chart here. Okay, let me ask you, thank you for all those who replied to that, send that one. So 80% of people, yes. And let me ask another poll. Let's see if I can get this working. Reset. Okay, will this knowledge help you with your trading? What you've just learned now, if you can actually apply that. Imagine if you took a trade here and you took it all the way down here. Just say, yeah, that's not bad. Okay, it's a number of weeks. It's a long-term trade, but it's simple and it works. Again, it's a bit more involved than that. You have to learn there's around 12 different types of supply and demand, and you need to understand when things are likely to break or when they're not. So again, 100% of people, this is going to help. Thank you so much for answering that. So what I want to do now is let's move back to the euro and look at what's happening right now. This is demand. Again, you know, anyone who was in the trading room knows that these lines were here beforehand. What's happening to price here? And this is happening right now. It's moving up, and we've just broken this downward move, this downtrend. You can see it here as well. We're moving up now. Why? We just hit demand. We just hit demand. And there's other reasons why as well. This move up from a trend perspective broke this downtrend. So this potential move may be buyable, and it may actually turn around and move higher. Okay, and that's one of the things that you need to start looking at. Okay, so let's move on. What I've just shown you now is a simple and powerful approach to reading the market, to actually identifying supply and demand. Now that you've seen that, let's take it a step further and learn how to do it yourself. I'm going to share with you now a training I have. This How to Read the Market Professionally course is designed to help you read the markets like a pro. Here's what it entails. The first session is going to teach you how to read the trend. Again, it's not going to be moving averages, and it's not going to be just look at the chart. Is it going up or is it going down? It's going to be exact using pivot analysis. So you're going to learn where a trend begins and where it ends. Isn't that useful to know? For example, say we're looking at supply and demand zones, and you see price move up into a supply zone, and you notice on a lower time frame, for example, so you're looking at a supply zone on the daily chart, and then you see on an hourly chart that the uptrends come to an end, and you're in the right location. Wouldn't that be a great place to sell? So you'll learn how to read the trend, and then we go through 3 sessions in supply and demand. We're going to learn all the different types of supply and demand. We've just looked at one aspect of it now. There's 12 different types of supply and demand that you need to learn how to recognize. And then we go into depth of really what's going on, so you understand behind the scenes what's really going on. Okay, so you'll understand why price might move through that zone now. There's a supply zone there, but it's not a high probability sell anymore. It's actually a high probability buy. Like, remember why am I always on the wrong side of the market? I try to sell in that supply zone and then it breaks through. And why is that happening? Because when I did sell, it went down and it went up. And then when I bought, it went down. And I seem to be always on the wrong side of the market. And then finally, we go through price direction. What direction is price currently moving in? Is it going up or down? How do you recognize that? Again, you won't find this in any book anywhere, okay? And we'll do this in multiple time frames. For example, how do you reconcile a daily uptrend when your 1-hour chart's in a downtrend? And I'll actually show you the live markets now to show you that. We have, interestingly enough, if we look here, we have an uptrend over here that was just broken. That's an uptrend broken on the daily chart. But over here, we have a downtrend that was broken over here. And we're in demand. So downtrend on a weekly chart breaks in monthly demand. And price direction here is pointing up. We're going all the way down and we're pointing up. You see how you put it together? So it's likely that this downtrend is going to break when you hit demand. But why did this uptrend break? Because if you look left, we're in supply here, and you need to recognize this as supply. There's no lines around it, but let me show you. If I was to put lines around it, this is a demand zone that we broke below. And you can see why we're in between zones and why we might be moving down from this area, because this is demand that may become supply, for example. Okay, so learning how to recognize that. So That's price direction and multiple time frame analysis. These are the only three things that you need to learn in order to trade successfully. You need to recognize the trend. You need to understand supply and demand. Prices move between areas of supply and demand, maybe in trends. And you have to know, for example, if you're in a trend, you could be in an uptrend, but it's not time to buy because the direction is down. You want to be in an uptrend when the direction changes from down to up. How do you recognize that? That's the most opportune time to buy, where the odds are in your favor and you can manage your risk. So let me tell you what people are saying about this trading. Marcus from Norway. Simon is probably one of the best coaches out there with a heartfelt passion for coaching and a real understanding of how the market works. He will help you view everything in a new way. The way he teaches is also really good, and he goes through it until you understand. I can honestly say that I've gotten more out of this training than I expected. Thanks a lot, Simon. And Yangos from Cyprus. I'm a newbie in the stock market and had no experience or confidence at all. I began my training by watching videos and joining brokers because I needed to start from somewhere, but it all looked like a giant mountain to me until I was lucky enough to meet Simon. I really struggle with trusting people, but his integrity is like no other. I trusted him, and just some weeks later, I feel that I can make magic happen. When everybody else is telling you the wrong things, Simon stands out from the crowd and tells you where you should really focus in order to become a successful trader. It's been a real pleasure being trained by you, Simon. So let me tell you, with this knowledge, what you're going to be able to do, you're going to be able to read any market. That's powerful. Any market. Actually, I use this to be able to get out of the property market before the property crash. I saw it in the charts and moved from being invested into property into cash. So you can read any market, Forex, futures, stocks, and whatever market has a chart, you can look at that chart and understand what's going on in that market. And this is a big one. You're going to be able to develop your own trading strategies. I can't tell you how many times I've had people come to me for coaching and for mentoring that I've sat with other professional traders, and those traders have told them exactly what they do. But it doesn't fit their personality. They can't make it work for them. It works for the trader, but it doesn't work for the person that they're training. So you need to take a step back and be able to trade your own trading strategies. You can trade someone else's, but you have to make sure it becomes your own first. You cannot make money trading someone else's strategies until you make them your own first. So imagine if you can learn a structure in which you can read the market. And within that structure, you can find yourself as a trader. You can find something that fits you perfectly so that you can execute with no issues at all because it fits you. The glove fits perfectly. So you're going to learn how you can develop your own trading strategies from learning the actual mechanics of how price moves within this framework. And you're going to learn, obviously, how to manage your risk. Where do you put your stops? So you have to correctly place your stops. Most people think a stop is there to stop you losing money. Correct? How many people, just type it in the room, how many people think a stop is there to stop you losing money? Actually, the opposite could be the case. You need to put stops in places where if your trading idea is no longer valid, you need to get out of that trade. Imagine if you put your stop too tight. You want to make money. So you put a bigger position on, and because of that, you need to put your stop in the wrong place, too tight. So what happens is it comes down, stops you out, and you lose your $1,000, for example, and then the market rockets up to your target and you're not in it. So what did the stop do? Did the stop you losing money? No, the actual stop caused you to lose money and stopped you making money. Hear that? So stops are not there to stop you losing money. Stops are there to get you out of a position that's not working anymore. And you have to know how to read the market to know where to put your stop. How many times have you put a stop in a place and it hits your stop and then it goes onto your target without you? And you look on the sidelines and it's very frustrating because guess what? You didn't put your stop in the right place. And you want to always trade with the odds in your favor. And here's a big one. You'll learn how to trade with confidence because you'll understand why you're doing what you're doing. It's not just random, the green light goes on, I'm buying, and the red light goes on, I'm selling, and I'm going to make money doing that. I've got no idea why. You want to understand why the market's doing what it is and why you're doing what you're doing. And you're going to learn much, much more. Gerard from London, from day one, I was impressed with the level of training I received and the way it was delivered as well. You came down to my level and explained things in simple terms that I can relate to and clearly understand. The wealth of information contained in your training is unbelievable and outstanding. When you said, I'll be amazed at the training, I said to myself, what else can he say since he's the one delivering the training? To be honest, I was blown away by what I was receiving in just part one of our training session. I cannot wait to start the rest of the training. I'm grateful that I met you at the beginning of my journey into trading. I lost some money before meeting you. I would have lost even more had I not got an education and training from you to put the odds in my favor. It's incredible. And let me tell you what you get in this course, and then we'll have a quick look at the market again. There's 5 sessions, each session about an hour and a half long. They're on demand. You can watch them as many times as you want, which I recommend, because sometimes you don't understand it the first time. You need to actually put it into practice and then go back and watch it again. And you may have the many aha moments that you will get when you do that, because it's learning based on experience. You cannot learn how to trade from a book. You have to actually go out and do it. You cannot learn how to play tennis from reading a book about tennis. You need to go out and actually hold a racket and swing it and hit a ball and get on the court and start playing. You can watch them at your own pace. Anytime, no live classes to attend, and you get personalized support. You can email me any follow-up questions you have after you've watched the sessions. Now, let's go back very quickly to what the market. I'm going to show you my other screen. And again, look at this. Here's a level, and you can see what's happening to the market today here. Again, this was drawn beforehand. Look at this. Why is the market dropping here? Why is that happening? Look at this. Big bars down. That's the end of the move up for the dollar for now. Look at this. This happened today. Okay. How do you identify that? You can see it in multiple times. You can see the same zone here on the 4-hour chart. Wouldn't that be good to know to get out of your long trade on the dollar, or potentially your short trade on the euro if you're in the euro, for example? And we'll put that, let me put this back on my other screen. So you want to join the training. The regular price is $4,997. Okay. It's worth much more than that. Purchase it before the deadlines, Thursday, October the 19th at midnight, and you'll get $1,000 off the price. I'm going to post the link in the room. I'm going to post it on the side. 1 second. And you'll see it popping up on the side right now. So you can click the link, and maybe Mike can put it in the room as well. I have Mike in the background who actually helps me run the trading room. We run the trading room every day, Sunday to Thursday. Sunday we prepare for the week, and then we trade every day. And also, if you want, you can go here. This is the link. And if you purchase again before the deadline, October the 19th at midnight Eastern time, you'll receive $1,000 off. I just have someone just went through the training just now, and I just asked his permission. He just sent me asked him how it went. And he sent me this on Sunday. He goes, "Hi, Simon. I've been through all 5 sessions already." I can actually show you in Skype. I'm reading this from Skype now on my other screen. I've been through all 5 sessions already, and now I'm going through it one more time, taking written notes and while doing it. I want to make sure I don't overlook something. I must admit, and everyone says this, yeah? I must admit that the course was truly an eye-opener. Looking at the chart now is completely different experience, and things make sense now. Finally, that's what he says. I'll get in touch with you when I finish for the next part, when I'm ready for the next course. Cheers. Yeah, that was from Demir. So again, what I would like to do now, again, if you have any questions, so you can see the offer, please feel free to click on it. And if you have any questions, type it in the chat room now. I'm going to open up for any questions. Again, you can ask any questions about the training, any questions about what we've just covered now. We'll open up for a few minutes for questions. Okay, so feel free to type any questions in. B, the session's recorded. I'll put it out probably sometime later on today or maybe tomorrow. Okay, you can email me, simon@tradesmartforex.com if you want if you have any questions, or you can Skype me. I think Mike's put my Skype in the room. You can put my Skype in. It's S for sugar, SINATK. So if you want, you can connect with me on Skype. I'm happy to speak with you in person and talk with you about where you are in your journey as a trader. But again, the journey is to start. You have to learn how to read the market. Okay, do what works. Okay, there's many different ways to do it, but you want to keep things simple. Again, the complexity will come in how you manage trades and how you get in and out of positions. Okay, you want to keep the decision making simple so that you can see what you need to do and act on it, and it makes sense to you, and it's you're flowing with it. That's called trading in the zone. Okay, I know it was a book written by Douglas, but you have to. I mean, eventually, all those that have been trading for some time, you know when you're in the zone. You kind of inside those candlesticks, and you can actually flow with them. Again, it probably doesn't make any sense to beginners out there. For those of you who've been trading for some time, you understand what I'm talking about. Okay, let's have a look. Kerry, thank you very much. Great class. Thank you, Simon. Excellent. Thank you for that. I can actually do that. Here. Okay, so how do you put your stop under a support area? Okay, so again, there's different levels that you have to understand what that support area or demand area is. And what I usually do is give it a bit more kind of wiggle room and put it a little bit more below that area. So I usually anywhere between, depending on the time frame, 5 to 10 pips and maybe even more, depending on if there's a couple of zones together, I may put it below the lowest zone. Just like sometimes the market may kind of shake out and go below one zone and then hit the other zone and then shoot up to the upside, for example, if you're looking at demand area. So you want to give it a bit more wiggle space. Remember, they're zones, they're not exact prices. Yes, Doug, multiple time frame analysis is good to see where one is. Yes, because imagine that you're in an uptrend and you're buying a pullback, but that uptrend is into a large supply area with big bars down on a higher time frame. So that's probably not a high probability buy. It actually could be a high probability sell, actually the opposite. This is where you don't want to buy in an uptrend. That's where the trend potentially will come to an end. Thank you, Kerry, for that comment. Appreciate it. Let's have a look. Can you give a quick analysis of Alibaba stock? What's the we can have a look at that. What's the ticker for it? I used to know I've traded over 2,000 stocks in my life, but yeah. So what's the ticker for it? If you can type it in the room, I'll be happy to look at it. Is it just guessing? Maybe I'll look it up myself, but if you want to type it in, I'm happy to look at it. Okay, B's asking a question. Do you use candlesticks to assess the market sentiment? I don't really look at market sentiment, but I do look at candlesticks. So yeah, so I do use candlesticks. Basically, this is all I do to analyze. I don't need anything else. I need candlesticks, candlestick charts, basic. I need to know where supply and demand. These are not drawn in by computer. They're drawn in by me personally. So, and we do that in our live trading room every day. So, candlesticks, supply and demand zones, understanding the trend, price direction in multiple time frames. That's it. You don't need anything else, okay? Okay, we've got time for a couple more questions if you have. You want to type in, Alfred, if you want to type in the ticker for Alibaba, I'll take a look at it. Actually, maybe I'll look it up now. Oh, okay, good. Thank you. Maybe it's this, Baba. There you go. Thanks, Mike. Yeah, okay, so let's take a look at this. So I can take a look at this and see it's kind of uptrending here on the weekly, monthly, and let's take a look at the daily chart. Okay, so for example, if you're over here, yeah, you can notice that this is demand. Prices jumped up and we came back into here and kicked off. And again, back into this area, notice a drop, prices start rising again. Now when an uptrend, so we want to align ourselves with the market. Notice how market starts to move down here, but we're in an uptrend. Notice this was red. This was once all red, yeah? And then we broke higher because in an uptrend, you want to be potentially on the buy side of the market more than the sell side. The buy side's a higher probability trade than actually selling. And this is what we're having now. We're having a pullback. And again, how far are we going to drop down here? These are drawing on all these time frames as well. You can see how they actually match up here as well. So uptrending, and we're just having a pullback at the moment, and it looks like, look on the bigger time frames, that this move is kind of weakening a little bit. Notice the tails here. Okay, and you can see the move up, it's accelerating. The bars are getting bigger as we're moving higher, and now we're getting smaller. This may be topping out, maybe. Okay, that's Alibaba. Okay, again, let me ask you guys one. Actually, let's have a... Okay, I think that's all. So I hope you enjoyed this, and those watching on the replay, hope you enjoyed it too. Again, if you have any questions, feel free to email me. You can email me at simon@trademarkforex.com. It's down here, the address. You can go to the website. We have a live trading room. If you want to join, you can join. And let me thank all of you for your time and for attending. Again, time is the most precious commodity in life is time, not money. Time. Once it goes, it never comes back. So I appreciate each one of you and those of you watching the replay as well for spending time with me. And I hope you learned something that will help you move forward with your trading. And I would love to hear back from you in the future or whenever you want. Let me know how this helped you with your trading going forward. So thank you very much, everybody. And I hope to see you soon in the trading room. So thank you.